In a significant development for homeowners and prospective buyers, mortgage rates in the United Kingdom have reached their highest level in 15 years. This sudden surge in interest rates is expected to have a substantial impact on the housing market and could potentially reshape the landscape for borrowers across the country. As of the latest data, the average interest rate on a standard 30-year fixed-rate mortgage has risen to 4.5%. This marks a significant jump from the historically low rates that have been prevalent in recent years, which averaged around 2% to 3%. The sudden increase has caught many homeowners and prospective buyers off guard, putting additional pressure on an already competitive housing market. Experts attribute this rapid rise in mortgage rates to a combination of factors. One of the primary drivers is the recent decision by the Bank of England to raise the base interest rate to combat inflationary pressures in the economy. The central bank's move has effectively increased the cost of borrowing for financial institutions, which in turn has resulted in higher mortgage rates being passed on to consumers. Another factor contributing to the surge in rates is the recovery of the global economy from the impacts of the COVID-19 pandemic. As economies bounce back, central banks around the world are beginning to tighten their monetary policies to control inflation. This shift in policy stance has triggered a domino effect, with mortgage rates rising not only in the UK but also in other countries. The impact of these soaring mortgage rates is expected to be felt by homeowners and aspiring buyers alike. Existing homeowners with variable-rate mortgages will see an immediate increase in their monthly payments, potentially putting a strain on their finances. For prospective buyers, the higher rates mean reduced affordability and potentially delayed plans to enter the housing market. Additionally, the rise in mortgage rates may also have implications for the overall housing market. The increased cost of borrowing could dampen demand, leading to a slowdown in property sales and a cooling of price growth. This could offer some respite for buyers who have been struggling with rapidly rising property prices in recent years, but it may also pose challenges for those looking to sell their homes. Industry experts advise borrowers to closely evaluate their financial situation and assess their ability to manage higher mortgage payments. Those who have been considering refinancing their mortgages may find it prudent to act sooner rather than later, as rates are expected to continue their upward trajectory in the near term. While the surge in mortgage rates may present challenges, it is worth noting that interest rates are still relatively low compared to historical averages. Nevertheless, the sudden jump to the highest level in 15 years serves as a stark reminder that the housing market is subject to fluctuations and borrowers need to be prepared for changes in the cost of borrowing. As the situation unfolds, homeowners and prospective buyers will need to closely monitor market conditions and consult with financial advisors to navigate these new challenges effectively. The higher mortgage rates emphasize the importance of sound financial planning and careful consideration when making housing-related decisions in this evolving economic landscape.